let's talk about the breaking news. The EU is ready to begin work on a Brexit transition deal after the summit. We're moving to phase 2. Good news?
Very good news. And I think this is the good news to come pre-Christmas. And now let's start having the real conversations about how can we trade with the EU. I think that's the really important piece. So I think this is really good news for all businesses today.
In the details this morning, they talk about a 2-year transition. So as a CEO of a major bank, with an investment bank, with business to do in Europe, is 2 years enough?
Well, 2 years will be enough as long as we get detail very early. Businesses like ours have had to move forward as though we are not going to get any form of deal that would be good for banking. We've had to move forward to look at the worst scenario so that we can actually build a bank that works for our customers. If we get a longer transition and get the rules established in that, I think that is really good news for us. But, you know, from our perspective, we've had to move forward anyway.
Can I ask you about the institutions out there, your brethren, the people that run the institutions here? If we get more detailed news on transition and financial services in this first 3 months of the year, could that make you pause for thought?
I don't think we can pause for thought. We have to get in a position of certain operations so that we can look after customers no matter what happens. But this does help because we can actually slow down activity if we think this transition is going to be a real 2-year transition. And we can find out what the rules are. But certainty is vitally important for banking.
And of course, financial services, I mean, the Canadians don't have a services element, a financial services element to their deal. So this is mission critical for you in terms of regulatory alignment. This is a new word. I'm hearing alignment. Take me through your vision of alignment for the city with Europe.
Well, right now we have total alignment. We are running on the same rules as Europe, having been part of the community. So it really is what's the difference going to be. And some people, of course, want a lot of difference and change the rules so that we can be much more flexible in Europe and the likes. But I think given it's one of our major trading partners, the closest we can get to alignment, the absolute better for us from a financial services perspective and from a customer perspective as well.
Let's talk about the customers, because this is good news. We're seeing a little bit of movement in sterling. It went up, it came down. It's moving. It's a pretty volatile currency. But the customer, your customer has been pretty battered, isn't it? I mean, UK consumer confidence back at levels that we haven't seen since we voted for Brexit. What's happening at the front end? What's the borrowing like for the customer, the retail customer?
Well, what I've been pleasantly surprised about is how resilient the consumer, i.e. the retail customer, the SME, the small businesses and medium-sized businesses have been since Brexit. And I suppose, you know, when 52% voted that this was a good thing to come out, there has to be some buoyancy around it. But usually uncertainty brings some slowdown in people's habits of borrowing, but that hasn't been seen. We've been seeing good levels of growth in our lending books, particularly around the consumer and the small business, which is a good sign. What
about Mark Carney? I mean, he said there's complacency. You people that run the institutions, that you're complacent. Would you agree with him that there might be a little bit of complacency in terms of the banking system at the moment?
I don't think so. I mean, we have been looking to see if there are any early signs of there being difficulties, and we haven't seen that. Whilst you've seen the odd larger corporation get themselves into a little bit of difficulty, our view has been that it hasn't been systemic in the industry. It's been more around the management or the structuring of those businesses as opposed to issues that are running through a sector, for example. So I think all banks have been keeping a very close eye on early indicators to see if there is anything dramatically changing. We just haven't seen it.
Well, one thing that is changing, and you made it very clear in the recent press announcement that you gave to the market, 259 branches are to close. But this is about business migration. This is about me, my mum, my sister, not using the branch, and this is about me going digital. My question to you is simple. This is repercussions. 259 branches closed. Is this the foothills of closure, or are there a more dramatic step to come?
Well, the moves we've made are very large. When you're taking away 250 branches out of a network, it is a big move. But it has come because customer behaviour has changed dramatically. And a couple of quick statistics that show how dramatic this has been, because it's taken me by surprise. Since 2014, which is only 3 years ago, 40% decline in the footfall through a branch network. But on the other hand, in the last 10 months, a 25% increase in the number of our customers using the mobile phone as their major portal into us as a bank. Those are dramatic numbers so quickly. And what we've decided is to get the branch network in as close to shape as we can so that we don't keep having to negatively surprise customers with a branch closure here and then there's another one in another year. Let's try and get it into as close a shape as we possibly can, given what we know today. But customers are changing their behaviour.
Your chairman was here yesterday. He wouldn't give us a number. I suppose my question to you is this. Are you ahead of the posse in the transformation? Are you ahead of Lloyds? Are you ahead of HSBC? Where are you in the benchmark of progress in this?
Well, I think we have shown in the last couple of weeks that we've made some... These are quite big moves from a banking perspective because our entire network of dealing with customers has traditionally been around the physical piece of a branch. But what hasn't come out is that over the last couple of years, we've also put 24 mobile vans that get to 600 of those small communities, the little villages and towns, 600 per week, where we can see those customers that, you know, would normally have wandered into a branch and done a little transaction, and the small businesses, that's important as well, that can actually, on a weekly basis, have that interaction with us. We've also connected with the post office, so our customers can go in and out of a post office, put their money in, take their money out, same with SMEs. And we've left behind community bankers as well in the little communities to deal with those that, you know, usually are, can I say, a little bit older, who are struggling with getting onto the technology, or that where the technology isn't good in their own little village.
Let's circle back to the investor. Your stock's up 22% this year. You're one of the best performing banks in the UK. 3 reasons why I'd want to own your stock. 1, the government gets off your shoulder. 2, you close the retail mortgage-backed securities litigation and you give me a dividend, right? So let's break them down. The government has an ambitious target, £15 billion to sell over 5 years. The phrasing that's used is in the financial year 2018, 2019. Help me here. Is 2018 possible in the calendar year? Could they begin to offload RBS 2018?
Well, it's quite clear that they're pleased with the progress we're making with the bank, and I think that was part of the statement, was they're pleased with the progress, that the bank is getting back to a more normal position. My personal view is I think they would struggle to sell the stock before the settlement of the Department of Justice. So I think that is a factor that we obviously want to get tidied up. So that is a factor also that impacts on whether we can pay a dividend, because no one knows how big that fine will be or when that fine will come.
Well, let's just talk about that, because the last time that you caught up with the market, it was the dialogue had picked up. What does that mean? Is it the first quarter? We're going into the close of Christmas. Will it be now in the first quarter? What is your best reasonable assessment?
Well, I thought it was going to be in 2017.
I know that.
And as a very optimistic human being, you know, there's still a chance, but a diminishing chance given where we're sitting in the year. But this is something that we do want to resolve, and that we've made it quite clear we'd like to resolve it. It is the last major, and I say major, thing standing between us and being a much more normal bank and being able to get back into a position of talking to our regulator about paying a dividend, which I think would signify that this bank has gone through a major recovery over the last 9 to 10 years and is back into a more normal position. Getting back to a normal position is about building capital. Let's look, the numbers out there vary between single digit, high single digit and double digit hit from retail mortgage-backed securities. Yes. If you took a double-digit hit from the DOJ, 15.5% capital, have you got enough capital to deal with that without coming back to the market? Well, one of the things that I've been promoting since I took over in late 2013 is we need to build the capital position of this bank so that no one ever worries about us ever again. Because, you know, we let the market down, both on we damaged our reputation and we showed that we just didn't have enough capital. Today we are in a very, very strong capital position, but I don't know how big this fine will be. And there are many, you know, guesstimates out there, and I think they are guesstimates until we have that conversation with the Department of Justice. But we have built capital, hoping that some of that capital will be retained so that we can give it back to our shareholders and use it to grow our business. But we do have to hold on to that until we've done the settlement with the Department of Justice. Has the mood music changed at the Department of Justice? Because there were loggerheads with Barclays when I caught up with you last year. There was lawsuits flying. Trump is now in charge. He's been in charge for a year. Has the mood music changed? They just want to get this deal done as much as you do. Well, the interesting thing is there are 4 banks outstanding with mortgage-backed securities issues. We just happen to be one of those. And at this stage, we've given them all the information we believe that they need to make a determination.
Has the changed?
It really is. I think there's a lot of distraction in the Department of Justice with other issues in the United States. So only having 4 left, I'm not too sure where we sit on their priority list. We would like to get this tidied up, though.
You talk about the dividend tidying up. I just wonder, I was looking at the oil industry. They've moved off scrip and they're giving good old dollars, and we like that. Where's your gut feeling? Am I a penny dividend? How are you doing, everybody? I'm here and I'm back. Are you scrip? Are you cash? When the moment comes, what do you want it to be?
Well, ideally, because we've got a lot of retail customers, I'd like to start a dividend. Once we've got through the issues that we've got, I'd like to start a dividend, be it small, but show people where the actual dividend will go based on the results on an annual basis. And I think that's really important. It does 2 things. One, it reassures people we are back to being a more normal bank. But secondly, it allows other investors to come into our stock, because there are many investors who can't come into a stock that doesn't pay a dividend. So I think that really helps. But we've got to get through the Department of Justice and make sure that we are making money again. And then I think we've built the business to be in a good position.
Are you tempted? I saw Aviva, I see Credit Suisse, I see Sergio Motti every quarter. They've tied their colours to a percentage mast. Aviva upping the percentage. Are you a believer in saying to the market, I will pay a certain percentage out in dividends?
Well, we'd build to a percentage. And I think you've got to be very careful of putting what that percentage is, because you put a large percentage out and you have a difficult year and you're pulling it back. No investors like to see their dividend or the percentage of dividend reduced dramatically. So I think you've got to be very careful, and a bank like us has to be very careful when you do start to pay a dividend again. Start small, build, but don't build up, because you can always pay specials. We can always participate in buybacks. But I think we've got to be very careful.
You whet my appetite there. So if I get the Department of Justice resolved, I'm blue sky thinking, right? I'm inside the boardroom. If I get the DOJ done, how quickly, what's the distance between DOJ? I know. What's the distance between DOJ and a snifter of a special dividend?
Well, I think it really comes back to how big is the fine from the DOJ. That's what it all comes back to, and that's the one big issue. I mean, we've got lots of other issues that we have to get ourselves through, but that's the one big issue that I think stands between us paying a dividend, or being in a position to pay a dividend, and becoming a much more normal bank.
The other issue that we had in the past couple of days is Basel, the great beast of regulation, the great taker of capital and benchmarks. I suppose, really, as you review and as you look at the Basel announcement, they've set a floor for measuring the risk-weighted assets. Do you foresee a scenario in which RBS has excess capital or adding to your capital as a result of these Basel III announcements?
Well, the announcements came out late last night, so you're asking me to give you an assessment of something that I haven't read through the entire document.
Top line?
But one of the things that we have been working through is what would the impact be on the bank? And it's nice to see that there is a phased approach to this starting in 2022 through for 5 years. To me, I think that gives banks the chance to actually get their capital sorted out. But going back to my original position, I want this bank to be solid in its capital position. I want nobody to be questioning our capital ever again, because that was the problem with this bank, or one of the problems. So building that, we have been reviewing against the discussions that have taken place over the last 2 or 3 years around what's become sort of Basel 3.5, because no one wants to talk it as though it's brand new. We have been working through what does that mean for the bank, and I think we will be in a very good position.
In terms of risk, there's a great deal of discussion in the marketplace. The Bank of England raised rates. That's good news for you as an institution in terms of net interest margin. But from what you see, how much more tolerance do we have for another rate hike next year, as is being postured by the market? What risk, if at all, do rate hikes pose to the customer side?
Yeah, look, well, first off, I don't see a lot of rate rises coming between now and 2020. We run on what we call consensus economics. We've got our own team where we say, well, what is the market really predicting? And I think there's probably 2 to 3 rate rises between now and 2020. And they're small rate rises. So each one of those has a small impact on the consumer, but I don't think it's damaging. But you have to be very careful of is what does it do to taking money out of the consumer's pocket at a time when you do want to keep this economy moving along. And it is a fragile balance today between the consumer spend and how much productivity growth, which isn't high in this country at this point in time, and how much can people actually absorb.
Tell me this, as you look into 2018, what's the biggest risk, Ross, to the UK, to banking? How do you see it?
Well, the biggest one was around Brexit, and that's why the news this morning that, progress is being made and we can move on to the real issues for the economy around getting trade deals sorted out over the next year or so. I think that was one of the biggest risks that this economy actually had, and it's nice to see progress.
Mark Carney also referred recently to the cap on bankers' bonuses as being something that was in his sightlines. Would that be good news if in a post-Brexit world, for this city to thrive, to sustain itself, how important is a review of the pay caps, the bankers' bonuses?
Well, for us as a bank, it's a very small issue nowadays because we are a retail and commercial bank, and most of my colleagues that work in the bank fit within the current arrangements. I think for the city at large, it is a strange thing to have a cap on bonuses, particularly in a large markets business. So I can see the desire to actually change that, because you want those people who are actually taking the risks getting rewarded for it, or not getting any reward at all if they take the wrong risks. And I think what's happened is more money going into basis has taken away the ability to actually penalise people for poor performance. So I think from a city perspective, it's a good thing, but from us as a banking perspective, it's not a big issue for RBS anymore.
Now, Ross, I haven't got a Christmas gift for you. If I had, it might be in the form of a Bitcoin. But then, of course, that could induce you to answer my questions more attentively. But there's a Bitcoin craze out there. It's pretty phenomenal. We were chatting about it before we sat down. What do you make of it?
Look, anything that goes from $1 to 16,000, well, actually 20,000 and then back to 16,000 with, I think, nothing behind it, I think is very dangerous.
Your chairman said it was Dante's Inferno. Do you... Which I loved. I love. That was yesterday. So match and raise the chairman.
There's no matching on that one there. I think he's probably got it right. I just can't see what's behind it, and I get very concerned when these things take off like they have, and what is behind it. And I just keep asking people, be very careful. Say to people, very careful. Do you really know what's behind that? And I struggle to see why you'd be paying 16,000 or 20,000 for something that is struggling to find what's behind it.
And just to close, markets, we've had a good run. We've had a good run in equity markets. Sterling's actually up on the year. These equity markets have a certain je ne sais quoi, a certain swagger about them. Do you think we swag in 2018?
I think it'll be okay. Let's have a look around the world. You've got America going very well, the economy. The Chinese economy is going very well. The European economy is actually quite solid as well. So I think, because we trade with these countries, I think it bodes okay for 2018. Still the uncertainty around Brexit, helped by today. I think the UK has shown the absolute resilience.